Please subscribe to the channel. If you press the bell icon, you'll be notified when Kalkine has a new video. Thanks for joining us on today's trending topic, top travel stocks to look at as Australia lifts the overseas travel ban. Sage here for Kalkine Media. After a long 19 months of closure, Australian borders open this Monday for its fully vaccinated travellers. And since March last year, it is the first time that Australian citizens, permanent residents and their immediate family were allowed to fly in Australia freely without quarantine and exemption requests from the ban for exceptional circumstances. The government has indicated that gradually Australia would also open for non-resident visitors such as business students and skilled migrants. The major development has also set the stage for tourism revival, with the ASX-listed travel stocks on the radar. Now, on that note, let us take a look at a few travel stocks listed on the ASX. The first one on the list is Webjet Limited. Webjet Limited has highlighted that it would be cash flow positive for the first half of financial year 2022, excluding investing and debt repayments. Since July 2021, the Webjet's B2B business has been profitable, and the company sees strong demand amidst the easing of travel restrictions in North America and Europe. It suggests a buoyant potential for Webjet as more international markets reopen. Next up is Flight Centre Travel Group Limited. Flight Centre Travel Group's US business performed strongly in the fourth quarter, offsetting the impact of the ANZ region's lockdown. The travel demand has been typically driven by easing restrictions in North America and Europe. The group is planning to be back to 100% of its 2019 TTV, or total transaction value levels, by around June 2024. Next on the list is Corporate Travel Management. Corporate Travel Management reported underlying net loss after tax of around $32 million in the financial year 2021, impacted by the COVID-19 operating environment. But the company's annualised revenue for the fourth quarter of the financial year 2021 recovered to more than 41%. As of 30th June 2021, CTM reported strong liquidity and around $99 million cash and no debt. Next is Sydney Airport. In September, New South Wales border restrictions and stay-at-home orders impacted international and domestic passengers' flights. From January to April, the number of passengers recovered to 65% of the pre-pandemic levels. And moreover, Trans-Tasmanian travel further contributed significantly to increase in traffic. Sydney Airport delivered revenue of around $342 million in the first half of 2021. Given the uncertainty concerning the recovery in 2021, Sydney Airport has provided no distribution guidance. Next up is Qantas Airways Limited. And Qantas and Jetstar plan to restart more international flights to popular destinations from Sydney. And in addition, it intends to operate regular flights to Delhi, which would mark Qantas's first commercial flights between Australia and India in 10 years. The last stock on the list is Air New Zealand Limited. Air New Zealand witnessed an increase of 51% in the number of passengers carried in August 2021. However, the suspension of the Trans-Tasman Quarantine-Free Travel, or QFT, impacted the company's short-term financial performance. And as a result, AIZ suspended earnings guidance in late August this year. If you do like this information, please like, share, comment on the video below, subscribe to the channel. If you press the bell icon, you'll be notified of the latest videos. But for more information, regular updates, head to the website. It's kalkinemedia.com. Sage here for Kalkine Media.